Welcome back. By now you're able to correctly identify support and resistance areas and use them in conjunction with the stochastic oscillator and two major candle patterns, the shooting start and the bullish hammer. In today's lesson, we're going to learn one more candle signal that you can add to your trading tools and use in combination with everything you've learned so far. We call this candle Bullish Engulfing candle. Despite the fact that we need two candles for this signal, it is extremely easy to recognize and combine with the previous candlestick signals that you know. It is found at the bottom of a downtrend. Typically, that trend will end with a large red candle. Then the next candle will open below the last red candle and will close above the opening of that last red candle. That means that this candle will be green and will engulf the entire range of the previous red candle. Hence the name Bullish Engulfing pattern. There is also the possibility that the downtrend ends with a bullish hammer with a green body followed by the Bullish Engulfing pattern, which of course should be green as well. As with the rest of the candle signals you've learned so far, the Bullish Engulfing pattern needs the stochastic in the oversold condition in order to validate it, and the next candle should open in the upper half of the body of the engulfing signal, or even above. The way to use it is simple. Look for the stochastic to give you the alert. In other words, wait until the stochastic is below the 20 area and start looking for your bullish candle patterns such as the bullish hammer or the bullish engulfing pattern. If you see the trend finishing with a large red candle and the next candle opens at or below its closing and closes above its opening, then you have a bullish engulfing pattern. Here are a couple of things that you must consider. First, the larger the last red candle followed by an engulfing large green candle is, the larger the reversal will be. And two, if the third candle falls below the middle point of the engulfing candle, that will invalidate the signal, pointing out that the bears are again in control. Hence, if the third candle does not open above the middle line of the body of the engulfing signal, leave the trade alone. Now, let's see a few examples to learn how to identify the bullish engulfing signal. Here we have a daily chart of the 6E. You can see we're coming down on a trend here, and we finish with a large red candle that is actually engulfed by the next candle. Notice that the next candle opens a little bit below the closing of the red and it closes above. So the body of this red candle is within the body of the green one, and the stochastic signal is in the oversold area. Let's check another market. Let's check the CN. And in the CN, I believe we have two possibilities. Here we have another downtrend that ended, notice this is a very interesting one because it ended with a bullish hammer. This bullish hammer, well, we had the stochastic in the proper location, but the next candle did not open above, so it opened below. Yet this candle was now engulfed by the next one, so this one here is called bullish engulfing candle. It is green and it engulfs the body of the previous candle. The stochastic is still in the selling in the oversold area, coming out of the 20 line, and that gives us a buying signal, which in this case is a daily chart. This was a very good signal. Let's look at the next one. This one is also very interesting because it engulfs two candles. Notice that we had the downtrend here, and then we have this candle. It's a very small one. Then we have the next one, which is a bullish hammer, and then we have the engulfing candle that not only opens below this one, but it closes not only above this one but also above this one. So we have a double engulfing candle, and again this is a very good signal on a daily chart like this one. Let's check another market. Let's check the ZB. Okay, here we have a downtrend. We end here with a not so important week, but we had a week there, and then we stay there with a engulfing candle. Okay, this was an engulfing candle that opened below the closing of this one and closed above the closing of this one, above the opening of this one. So the next one opened a little bit higher than this one, which was a good signal, and even though it went low, it went down, we still had a good signal actually that we had with this almost engulfing candle as well. And well, you can see how these few days of engulfing and doubt, leaving these big wicks here, and this signal also, that another one of the candle signals led to this important rally. Here we have another one on the CL. This one is a very interesting one because notice something. If we had identified this area as a resistance area, you can see here it served as resistance several times, and this one also served as resistance several times. Well, notice how once that we penetrated those two lines, let's say this area of resistance, it became support, and now we had them here as support. We penetrated again, and it was again support. It served again as support here. Notice when it went to this area, it bounced, and it did it again, and it bounced again. And well, when a few days later, actually probably even a few months later, we encounter a downtrend that ended in that area. Notice right here, it ended precisely in that area of support that we had identified. We have the stochastic in the right place, and now we are in that area. We have been making a bullish hammer here, and now we have an engulfing candle. So that tells us a very good way, a very good signal to go up. Now we are combining not only the fact that we have the stochastic, we have the crossing of the stochastic. Now we are crossing the 20 from below, and we have several candles with big wicks, including this bullish hammer, followed by the bullish engulfing pattern. So this is a great signal. And then later we have the support again. This area that we had identified several months before, it serves again as support, and that gave us another wonderful example, because we finished there in the support area. Even though we didn't have the stochastic in the oversold area, we did have an important support here that we know has been working as support here, here, and before, and as resistance in all these areas, you can see, right, for several months actually, and then, or several weeks in this case, several months since we started. But now we know that that area is a very strong area. And what happened at that precise area, we encounter a bullish engulfing pattern. It was coming down. Okay, we had a red candle, and then we have a green candle that engulfs that red candle, and is accompanied by that important support that led to a very good rally. Okay, now enough examples. Now your homework. Identify bullish engulfing signals in your charts using different time frames. 2. Verify that those signals were valid with a stochastic or, as in this case that I just showed you, with support areas. 3. Take trades in your sim using all the candle signals you've learned so far, using support and resistance areas in conjunction with the stochastic signals. And 4. Send all your trade for correction. Next on TNT, we are going to learn the bearish engulfing pattern.